Hey, Sean Maloney, Digital Business Masters. Welcome to another strategy call. We do these every single Monday, have done for months and months and months because it's so important. A lot of it is repetition. It has to be, repetition is the mother of knowledge. And it's just a case of making sure that we not only frame what we've done over many, many years, but also why we're now even more energized to continue that path for many years to come. So the blueprint's there. We already have a Digital Business Masters blueprint. We understand what it comes from and what it's built on. And then we go into some of the macro and geopolitical aspects that have to be understood if you are going to be participating in what we call the center of the money supply. Right? That's the problem people have got. They spend all their lives on the peripheries using what's called fiat currency. They neglect to put themselves in the center where purchasing power is preserved. And then as governments and big institutions and bosses and banks and big companies start to recognize this problem, then it just means that there's more demand on the core assets that represent money. So what we have to do as individuals is own those assets. And then we work through accordingly. Now, is it a straight line, a magic money ticket? Is it winning the lottery? Of course it's not. You have to run it like a business. But we've been very successful at doing this as what's called DBM, and more recently, the Academy division of DBM, well over a decade. So we're very passionate about helping as many people as possible to at least understand that this has happened and is happening. So part one of this call is all about the big picture to make sure that you realize this is the most valuable information on the planet. If there's any question about that, people just don't appreciate that it exists, let alone what to do about it in real time, let alone keeping up with it and managing it as a business as opposed to just waiting for somebody else to solve your problems. And then part two, we put all that global economic firepower and knowledge and information into practical ways to actually make a difference today. So when you're in your social circles, in your communities, with your families, with your friends, and you're hearing an overwhelming despondency, an overwhelming disparity against society from all sorts of directions, then you peel that back and just have a look at where the core of the issue actually is. Then you start to realize what you need to do, and just you, to affect change. And it's in that the real power comes into play with regards to life-changing abilities, not just about the money, but about the freedom you get to be able to affect change. So this is what we're most proud of with the model. Is it easy? No. The most people have a go at it like going to the gym in January and then give up by March? Yes. But go figure, right? Those who do stick through it and treat it professionally and with respect understand the power of what it is. Now, we're not here to give you any financial advice on that regard whatsoever. The interesting part about this whole model is it's got nothing to do with advice. It's got everything to do with applied education. So our job is literally to be an educational provision. What you then go and do with that education is your business. You're a grown adult. But obviously we have lots of blueprints, lots of things we do to support people through as they navigate what is the best thing to do. Because once you've created the right mindset and the right skills and you've allocated into the correct systems and done that for long enough, you cannot not create income. It's hard to fail. But the big thing about income is that that's the easy bit. The hard bit is managing the income, which is known as wealth. So that's why we have such a long tail with our client base, because a lot of people get through the process of creating income, but then they fail to manage that. And that is a big part of what we do as well. Why are we so passionate about it? Well, as I say every week, it's because the sooner ordinary people understand that whether they like it or not, what they've been born into is a system whereby you're encouraged, educated, and in many ways coerced by government, media, bosses, banks, etc., even family, to just follow a path of get the best results you can in education, convert that into starting a career, and then do your best to hang on through decades in exchanging skill and time for what people think is money. But what they're doing from the day they walk into the workforce is they're exchanging skill and time for currency. Now, if you don't understand the difference between money and currency, and you're moaning that you've not got enough money, then you need to go and study the difference between currency and money. As soon as you make that realization, you can start to educate yourself about how we continually convert currency to money. And best of all, we use that to create cash flows that outpace inflation. Now, if the lack of purchasing power in your life is palpable and you can feel it, that's because the price of goods and services seem to be going up at a higher rate than you're able to transfer skill and energy into the acquisition of currency. But it's not the fact that you can't earn enough currency that's the problem. It's the fact that the currency that you are earning in real time is deflating at a higher rate than it costs to buy goods and services for you to live the life you feel you want to live. Think about it. Go and have a look at the deflation, the lack of purchasing power, the falling of purchasing power of real currency in real terms. You'll hear the media talk about every week, every month, oh, inflation's getting back again to 2%. They're talking about the year we're in. They're not talking about the 6, 8, 10% of inflation that's happened over the past 2 years. So your job is to recognize that the real aggregate of devaluing purchasing power is actually 8 to 10% per year. So if you're not allocating devaluing currency into money that appreciates at a higher rate than that, then how are you supposed to get ahead? So this is a massive lesson. And without this, combined with the technology advancements that represent sound money that we are blessed to be living through as we speak, then you're either going to carry on as you are and hope for the best, or you are going to get involved in making a difference, which is where you're converting the same time and skill, but you don't leave the currency just festering in a bank account or a pension fund. You take control and you allocate that devaluing currency into appreciating assets that you understand and have now had long time served history, well over 14 years, of proving their ability to outpace inflation. But that is not the best bit. We'll talk about the best bit as we go forwards. The whole idea is for you to understand that you can still live the life however you want to live it in terms of funding liabilities, but understand that you no longer buy liabilities. The minute you understand the difference between those two words, buy and fund, that's the minute you shift. That's the minute things shift. It's very important. That's why I stress this every week. Then people ask, well, okay, that's all sounding very, very interesting, but what do you do? What are the vehicles on which this is done? Well, there's many ways to do it. You can go and build a business, right? You can go and put yourself in private ownership of stocks and shares and wait for cycles. You can go and buy property and wait for cycles. We've done all this. We're no spring chickens. We've done all this over decades. And luckily, 2008 happened. Because prior to 2008, yeah, building businesses, yeah, okay. Owning properties, renting them out, yeah, okay. Buying stocks and shares privately in private funds, yeah, okay. Did all that. And then 2008 comes along and everything changed. In fact, ever since 2008, all the way up through COVID, all the way up to where we are today, 17 years later, everything's changed again, but on a much more subtle basis that most people don't even realize is happening. And in all that time, not only did we figure out that we need to get closer to the money supply, we need to own accretive and appreciating assets in comparison to devaluing currency. Of course, we need fiat still to this day. Well, it's diminishing quickly now, but still to this day, we need fiat to be able to interface and interact and do things. That's what most people think they have to rely on 100%. That's not true. What you need to do is convert the bulk of your fiat over to accretive assets and then utilize that to be on the front foot as the rest of the world realizes that it needs to have accretive assets on its balance sheet. And that's manifested itself by luck or by crook or by whatever. I don't know. I don't know why this happened. But just after 2008, something very interesting was born, which whole purpose was to create an alternative that provided us access to an asset that on average has appreciated in its dollar equivalents by 68% per year. It's called CAGR. And that is what Bitcoin is. Now, many of us tripped into this accidentally. We were curious. We felt we had no choice because we could see the writing on the wall with regards to where people would end up in 2025 from where we were looking at it back in 2009. And we took a punt. Now, do you think we're happy we did that? In terms of where we are today, it's led us into a whole ream of opportunities and capabilities and life opportunities that means we are our own bank and we can do whatever we want in real terms. Yeah. But we then must understand the need to manage that ongoing. And in my opinion, most importantly, to try, do our best to find ways that help people who did understand this and are starting to understand this to put themselves into a formalized business plan that will put them on the front foot whenever they start. They always say people will get, people get into Bitcoin at the price they deserve. Look at the Harvard report that came out last week, back in 2015 or something. They were moaning that Bitcoin will go to more chance that Bitcoin will go to $100 than go to $100,000. That's what they said. Harvard University, some smart ass professor in Harvard in 2015. There's more chance of Bitcoin going to $100 than $100,000. Just last week, Harvard bought $116 million of Bitcoin at $116,000 a coin. Do we rub their faces in that? A little bit. But is that starting the process even more of vindication to what I've been talking about? And what do you think those of us who have realized what that actually means in balance sheet terms do? Do you think we just sit back? You could just sit back on it. You could, if you wanted to, just treat it as a pure savings plan and live your life as normal, mining fiat currency for a living, hoping that your Bitcoin one day. You could do that if you want to. Just like a pension plan. Oh, I can't wait till I'm 65. I'm going to retire. Why are you wishing life away for? Why can't you retire now? In that sense, what does retirement mean? Well, it just means you're able to do what you want without being beholden to a boss, right? So what do you think it means to build your own balance sheet and then put it on rails? Now, is this easy? No, definitely not. Is it worth absolute focus and study till you find the right solution and mix in your blockchain factory? Yes. Because once you do find the balance between equity and yield, you are in full control. You're not just waiting for some price, waiting for some market, waiting for some pension plan, waiting for some age, waiting for some government to tell you you're in an ability to get forward because you are understanding critical mass on balance sheet to perpetually fund cash injections into yield. And we do that on smart contracts in USDT, and we do that on what are called altcoins. The clever thing about altcoins, of course, is you can do equity and yield in one ecosystem without having to go through all the complexity that we do between Bitcoin and smart contracts. To run both is even better. Do most people have the capability and understanding to go through that process, to de-risk cash and put that into these technologies that allow people to create yield by doing what big institutions have done forever? Of course they don't. I'm talking about retail people. But those that do find this to be utterly life-changing if they keep going. So our job at the Academy is much more about helping people get started and helping people stay started and helping people keep going, right? Just like being a physical education trainer in a gym, busy January to March, not busy March to December, because people, frankly, can't be bothered, right? Well, they want the change. You can't be both ways, I'm afraid. You're going to have to make that decision for yourself. So the structure is very simple. We help people all over the world, very, very strong coaching team that we've developed, that we're all ordinary people. We're all ordinary people at the end of the day. We've just recognized this early and we got moving on it. But we have a very strong coaching team that all understand and have been through this. In fact, in many ways, we are still going through this. That's the clever thing about it, and the enjoyable thing about it. This thing is alive. It never stops moving. It's all about adjusting mindset. We're doing it all the time. Skills. Never neglect your skills. Yeah, this is one of the biggest issues people have. They have skills gaps and they think they're not worthy. They think they can't do it because they've been told that by parents, teachers, and bosses since they were 18 years of age. You've got to shake all that off and determine that you are going to make a difference. The difference won't come from you just getting lucky, speculating on buying some altcoin, getting involved with some smart contracts, or even DCAing Bitcoin. It definitely won't come from you playing the lottery or waiting for a wage rise or hoping the government magically recreates state pensions. It definitely won't come from that. But it will come from you determining before you get anywhere close to your convoluted ideas of what income you wish to have by putting yourself front and center into skills. Get the skills that other people have got who have got what you want. If you hear us in the Academy constantly talking about different ways to leverage and work balance sheets and organize cash flow forecasts and do spreadsheets and work out numbers and figure things out, if we're doing that and we've already achieved what we want, would it be a good idea to listen to us? And if we're providing that facility and you're not taking it on because you don't want to ask, you feel ashamed, you don't understand, you don't feel clever enough, then where's the problem? So it's up to you, but this systems work. It's been around now for 5 years. 5 years is an eternity in this industry. But what we've done and what we always do to try and make things as approachable and easy and non-judgmental, because I think a lot of people do feel a little bit judged, to be fair. And that can, it's difficult to manage that. So what I've come up with just recently, launches in September, is a wealth builder series where you can sit into that in your own time and comfort, right? Either on a monthly basis or on a, you can buy the whole thing in one go. The point is you're going to be able to go through it in your own time, follow the steps, follow the tools, listen to the automated instructions that we've created, and then once a month sit with someone who's actually got what you want and is going through the process to building it as well. Yeah, maybe a couple of years ahead of you, maybe something like that, right? The coaches, in other words. So we're trying to find ways to make it easy for people to get into this process, and that starts in September. So if you're not already a $25 per month skills subscriber, you need to upgrade, okay? So those options will come out very shortly. Upgrade to $25 and you're in. If you're already an income subscriber, still subscriber, you're grandfathered into this. It's a natural part of it's a free provision as part of your existing subscription, but you need to be at least $25 as what we call a skill subscriber. So look out on the channels for that coming very shortly. All right, so that's that. This is the wealth builder series I'm talking about. Okay, very, very important because it gives you a staged process all the way from mindset all the way through to wealth in 12 months. Every single course is defined, and it's everything we've learned over the last decade, put into these succinct steps. So we're very proud of it. It's very powerful, and it'll be launching next month. So make sure you're ready and positioned for that. And don't miss a month because it moves very quickly. Yeah, it's like building a wall. Everything, all the bricks go on top of each other. You know, you can't put the roof on until you've built the walls, right? So down to the meat and bones of what this strategy call is about every week. So I like to share this slide every single week. Thought we were going to get past this 123 today. We've just punched very close to it now, a couple of percent off a Bitcoin all-time high. Very, very confident we'll go through that in this next week or two. So for those of you more sophisticated who only understand what that means in terms of how we collateralize and leverage and use that to protect cash and allocate into cash flowing entities, wherever you're doing that, remember it's all about running yield. You can't just rely on equity. You've got to run yield as well. So many of you here in the DBM Academy will understand what I'm talking about. We'll talk about that more in section 2. But in terms of this overall infographic, it speaks for itself. We've come from here and we've held on and dollar cost average and worked through all the pain, all the people pushing us back saying we're crazy, everybody saying it's never going to work, it's a flash in the pan. Predominantly people who've either got self-interest in the established system or some other form of asset, which is financial advisors, or people who just pig ignorant and don't understand what it is to create sound money, right? Either way, we've fought through all that, and here we are today on the precipice of totally different times because the institutions, corporations, governments are involved now, which gives it a huge vindication. Now, I'm not saying that's good, bad, or indifferent, as we'll talk about in a minute. There's lots of reasons why we have to keep our eye on the governments, obviously. But at the end of the day, as private individuals sat on a balance sheet that's owned by millions of other people around the world, as we've seen over this last few hours, just today, a price movement from 116,000 to 122,000, that's all being driven to the benefit of us in isolation in our own little businesses. Show me any other business on the planet where you get an interconnected balance sheet with that power. Think of Bitcoin as your core balance sheet asset, your treasury reserve. And if it's good enough for sovereign wealth funds, it's good enough for us. If it's good enough for BlackRock, it's good enough for us. Now that because we own it so early, we're able to take full advantage of that, knowing that now we're just going into more and more and more clean air. That's the point of this chart, right? And remember, 99% of this entire asset base will be fully mined by 2036. That's not that long ago in the grand scheme of things. Not that long away. If you understand supply and demand, you'll know the importance of that. And remember this CAGR over 14 years. Why on earth was anybody talking about the reasons why you wouldn't own this asset 5 years ago, 10 years ago, 15 years ago? Why? Why even more today? Well, they're not working hard enough. That's why. Oh, they've got vested interest in something else. So, as we said, the macro and the geopolitical aspects of what gives us this confidence is intertwined. So 8 months ago, we reinstated the strategy calls at this level because it's very important to understand if you are going to be a part owner of the center of the money supply, and there's only 2 assets on the planet that provide that provision, then you must understand what's going on at the highest levels. Again, the people who don't make it convince themselves that they don't want to get involved in politics or macroeconomics. I can't do it. I don't understand it. And they fail. Those people that take half an interest, and we do our best to provide a once a week download of all the top information, possibly you could succeed just with that. Just having an awareness, because that tends to give people the motivation to move forwards because they can see the wave. Yeah. But the real way to do it, obviously, is to be your own boss, get in front of your own information, make your own judgment calls, be your own self-sovereign person, and make your own decisions. All we can do is obviously relay what we pick up on, because we're blessed to be able to just analyze this every day of the working week, right? We're not under pressure to go to work. We don't have to answer to a boss. We're not under pressure to feed a bank or pay a mortgage. So the whole thing, we've got time. We have time to be able to absorb this information, and our job is to relay that as I'm doing right now. Now, some big information this last week. I mean, stuff that if you'd have said to me even a year ago, I'd have gone, no. The government aren't understanding this. There's a total ignorance or complicity, whichever you want to decide on. It's never going to happen. But lo and behold, mid-2025, here we are. Now, Cleone did a great session on this today. So if you're in the systems subscription, you've got the ability to access the forum, the DBM forum, you'll see the recordings. US, this is in the US, 401k liquidity is now accessing sound money, right? If you understand what that really means, as Cleone was outlining, it's basically meaning that millions of people are benefiting despite their personal and private lack of awareness. So these are people who have been convinced since they were 20 to put devaluing currency into a so-called savings plan called a pension. They've been convinced to do this because the parents did it, and it's what the government say, it's what the bosses say, and everything else. In fact, in many countries now it's law that you need to allocate a portion to a so-called pension. And they then have the assumption for 40, 50 years that the purchasing power of that at a point in time, which is defined by an age, will give them enough purchasing power to live the rest of the days without having to go to work. They actually believe that. So luckily, the shift in the dynamics of government complicity or ignorance has shifted to such a degree that they are now either realizing that they do need to give people more indirect access to sound money, which is basically what's happened by signing off the ability for 401s to enter the sound money space, in other words, the Bitcoin market. Yeah, they've either done that because they are doing it for the right reasons, or they're doing it because they're just Hail Mary. I'm not convinced yet where the government stand with those two things. Is it a Hail Mary, or are they doing it because they do actually understand the power of helping people get access to sound money? I guess time will tell. But the clever thing about this is it's not just the fact of the US 401k participants that are indirectly benefiting. It's the rest of the people in the world that own Bitcoin that are directly benefiting. Why do you think the price went from 116 to 121 in less than 4 days? Why do you think the price will continue pushing through 150, 180, 200, 500, 1 million as all this liquidity piles in over this next 5 years? And you only need a window. That's why it's important to understand how to manage wealth, right? We don't rest back on this and just assume that everything's going to be all right. That's why we don't build our businesses just off a balance sheet. We are acutely aware that the market can shift and change. But if you're looking at a 68% CAGR on 14 years to date without any of this, what do we anticipate to happen with this over the same cycle, right? In fact, a much shorter cycle, in my opinion. What we've done over the past 14 years is going to happen in the next 5. And then to top it off last week, and we don't know whether this is going to play out or not, but refer to the podcast we did on this last week over at the DBM podcast to really get into the details about this. The Fed Reserve reports that they're acknowledging via a major report they issued a possible policy to revalue the gold reserves. It basically means the gold held on account in the US system, valued at 1973 prices, could be, as an accounting paperwork sleight of hand, right? They don't sell the gold, they revalue it at today's price, which, in case you haven't noticed, is also at an all-time high. Something we spotted well over a decade ago at DBM, hence we accumulate physical gold. So they're looking to do that. But it doesn't, as I said on the podcast, it's very important to understand that that revaluation, which has gone on in South Africa and Lebanon and all sorts of countries over the past few years, isn't the done deal. It's what you do with the revaluation. So fortunately, whether these, again, are politicians doing this out of holistic benefit, which I think some of them are, to be fair, or they're doing it because they're just Hail Marying, we're going to find out. But at the end of the day, if they allocate some of this liquidity towards digital energy, which is exponentially better than gold energy in that sense, and the manifest as Bitcoin, manifest as what they call a strategic Bitcoin reserve, then what do you think that's going to do to the assets that we own in our own little balance sheets? Yeah. So what you're doing here is you're not only just outpacing inflation at 68% CAGR, you're actually building out long-term future growth and ownership, right? They won't necessarily stay in Bitcoin. There's all sorts of things we need to think about going forward to lock this down. Traditionally, it's been land and property, and that's why the families of New York are still very, very wealthy 4, 5, 6 generations down the track, because the ownership of the fundamental asset their great-great-great-grandfather bought has still got value in that landmass, right? We understand all that. So things will shift going forward. That's the beauty of the job. But it's a much more pleasurable journey when you've got that decision-making liquidity to start looking at those different things, as we spend a lot of time doing, even at this stage, in the income and wealth subscription levels at DBM. We're learning about that as well, right? As is the world. There was no such thing as Bitcoin treasury companies this time last year, in the sense we know them today. In fact, you only had one, if any, MicroStrategy, which celebrated its 5th anniversary just this last week, by the way. All right, so 2 big headlines there. Go and listen to Cleona's recent workshop and get onto the podcast if you want to know more about it. Then you get into more of the it's less exciting, but it's certainly stuff that all builds upwards, puts air in the balloon, right? PayPal's latest president, David Marcus, generations to come will wish they were born in this one time when still we had a chance to own one full Bitcoin. I've said for years, I've lost count of how many years, just own one Bitcoin. People either acted on that or they didn't. Now, it's actually more like own 0.1 Bitcoin. Now, if it takes that's a bit longer, okay, you have to be a little bit more patient. You have to let things transpire. But if you've already got more than 0.1 Bitcoin and you're heading to 1 Bitcoin, if you own more than 1 Bitcoin, you're absolutely made. All right, so congratulations. Coinbase plans to raise $2 billion through a convertible notes offering. Okay, so this again is just more liquidity, basically. It's just more access to a bust fiat system that is only being upheld by government printing, Fed, and central bank brinkmanship, and an overinflated stock market. So what's happening is a lot of that old money, let's call it, is readjusting. And Coinbase are at the forefront of that, which is why they're offering these convertible notes. Make of that what you will. Technocrats. Yeah, we're keeping an eye on the technocrats. We understand. Read the book, The Sovereign Individual. We get it. We know. You can't, you've got royalists, you've got the religion, like religions first, then royalists, then politicians, now into the age of technocrats. Yeah? You're never going to win as a normal individual if you just put up with what you're given. You've got to go and make the change for yourself, which is what we spend so much time doing at DBM. SEC Commissioner Hester Pierce, okay, fantastic lady from what I can make out, certainly different than her predecessor. Liquid staking is a solution to, is a new solution to an old problem. Yeah, so basically she's given us the green light, as we've been doing for years. This is going back to creating yield again. Yeah, there's lots of platforms to talk about in part 2 that we have very successfully continually yielded from, because we just simply loan our assets to these different ways that people want to speed up the process of staking, right? It's not rocket science. It's quite straightforward. It just takes time to build, especially what we've been through for the past 7 years. But now we're in this era, and we've managed to have the fortitude to keep our assets locked in, and we've managed our assets and kept them moving. right? Which a lot of people struggle to do. We've been able now to take full advantage of that, backed by no less than the SEC. And very shortly, pleased to say, the FCA in the UK. What the Europeans are up to, I have no idea, because they're headless chickens. I guess we'll find out. Okay. So this comes as the SEC clarifies that liquid staking activities don't involve securities sales, but rather custodial functions, you see? So we're owners of that. Private people can provide private liquidity, not a security. You don't need to be qualified for anything, all this crazy, spurious financial advice rubbish. You can, with a little bit of education and a little bit of application, understand how to bring in yield to your life every single day. We go into that in quite some detail in the Wealth Builder series starting in September. Again, I do keep an eye on UK stuff because obviously I'm a little bit biased towards the UK, but this is just talking about stuff that's happening in all countries at the same time, to be absolutely honest with you. But these are big deals coming through. UK listed Union Jack Oil, which the irony is not lost on me. The Bitcoin mining site. So in other words, if you've noticed what's happening now is people are realizing that stranded energy or excess energy in that case that isn't actually used by the grid or by the company attached to that energy creator is being used to mine Bitcoin, right? Look at what's happening in Bhutan. Millions and millions and millions of kilowatts of energy piles down those mountains every single second. And they've been cute enough, rather than just being wasted as it would not ordinarily in that sense, with water just flowing as water always has, they've converted some of that water energy into creation of wealth, monetary energy. Yeah? And if this succeeds, if what Union Jack are doing with their oil plants, you can bet your bottom dollar lots of other places are going to be doing it. In fact, there's talk in the US of these big AI and chip companies putting their own little mini nuclear generators next to them. At last, someone with a bit of vision, someone with a bit of business knowledge is teaching and providing companies with the ability to be autonomous. What do you think they're going to start doing? As Union Jack Oil here, once this is successful, which obviously it will be, they're going to start moving into their own Bitcoin treasury at the side of their own energy generation and Bitcoin generation. What do you think that means? Simply, every village, town, and city in every country should have its own Bitcoin generation plant, right? And its own sovereign wealth reserve to at least get people off the streets, to at least give people an opportunity to be clean and lit and safe. Have you seen what's going on in Bedford in the UK? Research this stuff and watch, because from us as an owner of the interconnected balance sheet, we just get to ride this up, right? And we have the pleasure and privilege of sitting down for an hour every week and going through all these realizations like light bulbs popping in everybody's heads. As a legacy owner of Bitcoin, we just ride it up, right? But the most important thing is to look at this technology and say, why is this not happening in my town or country? More and more people are going to realize it. That's why Bitcoin is much bigger than money. Finally, $3 billion YouTube competitor Rumble announces they'll integrate Bitcoin on the Lightning Network, right, for network tips. So that's very important. Rumble is a very small version of YouTube, right? So what you can do on there is tip. If you like a concept, you can tip, right? Now you can tip in Bitcoin. That's what that means. So it's just a very simple way for people to use Bitcoin as an actual currency as opposed to just a sort of wealth. Second part of page strategy. BlackRock's Bitcoin ETF gives more gains, 8.5 billion. BlackRock can have 10x more options on Bitcoin ETF. It's just bonkers. I mean, that was the Bitcoin ETF that BlackRock released, might have been a year ago, was by far the best performing ETF that BlackRock have ever done. BlackRock own everything, right? And whether you think that is just an early burst of excitement, whatever you feel, or you think that's because people are getting it, it doesn't really matter. It doesn't really matter. They're just talking about accelerating it 10 times more, right? Again, with governments and institutions putting the greasy paws all over what purists think is and should be something sacrosanct to individual You can have your own beliefs on that if you want. But if you want to get romantic and idealistic, good luck. At the end of the day, you just need to hold your coins, be sovereign with your coins, own them in self-custody. We'll talk a lot about that in the module, I think it's module 5 on the course, because not your keys, not your assets, right? So therefore, you're protected from the shenanigans of what goes on with governments and institutions. That's the main message I'll keep repeating as long as people want to listen. Again, similar with Goldman Sachs, okay, they expect the FOMC to deliver 3 consecutive rate cuts in September. Now, it's a big deal, as I said last week. It's sort of twee these days when you're comparing 401ks and gold revaluations being put onto sovereign wealth funds. It's sort of twee now to be talking about shifts in interest rates. But don't forget, those of us who understood it all the way back from 2012, we rode up those low interest rates for many, many, many years. Right? It was only when COVID came along that everything started to shift and the interest rates went through the roof again, relatively speaking. If you're born in the 90s and 80s, right, you'll know that wasn't through the roof at all. But in terms of where we're at now, rates are coming back very, very quickly, coming down very, very quickly. They've already happened in the rest of the world. We know what's going on in America with the politicization of the Fed. That is going to shift very quickly, and it has to. But either way, even someone as belligerent as the current chair can't hold back the dam. So 3 consecutive 0.25 cuts over the next, calendar year. That has massive consequences for liquidity and people who wish to move into sound money, such as Bitcoin. Ethiopia State Utility, this is a good example again of using surplus power, 55 million. Fair, hats off to the Ethiopians. How many years have sub-equator countries, be it South America, Africa, or parts of Southeast Asia, how many years have these guys had to put up with 300 years of hegemony from Northern Hemisphere countries, Europe and US in particular, and now China? How many years? When are they going to start to stand up, get properly organized with their own people and their own leadership, start to push off the henchmen, the money men of the central banks, and start to do what Ethiopia's done there? I guess we'll find out. Keep an eye on El Salvador. They spearheaded this. In fact, I've just heard today that kids from 7 years of age in El Salvador will have on their curriculum sound money. Dividends are already being paid out to the citizens of El Salvador from sound money. They're already mining sound money from volcanic activity. How long do you think it'll be before countries realize this, such as Ethiopia there? Hats off to them. All the power in the world to them. Especially with an expanding population, right, in those parts of the world. So, to finish, Bitcoin's cycle has just changed significantly. Okay, so a very big podcast we did last week as well, just because of the podcast to get more details, save my breath today. The march to 1 million coin is just inevitable. When that appears, who knows? Actually, who cares? Who cares when the price gets to 1 million? I don't. All I care about is a long, steady march of accretion over time that I can reutilize in my own power, off a balance sheet, into places where I know yield exists, and keep doing that for decades and decades to come, and teach my children to do that. That's a very important point. If your kids or grandkids are not keeping up with what you've achieved and what you're doing, make sure you don't forget them. Because this technology and ownership is useless without understanding exactly how to manage it, especially in security. Right? So the Bitcoin cycle's definitely changed. Get into that Bitcoin podcast, DBM podcast, and you'll learn from that. And then just to talk about this gold and stocks interesting chart here over the last 50 years, which is purely 100% purely a sign since 1971 of the valuations that come through being driven more by devaluing fiat currency than the actual value of the rock or the companies that represent the stock market. Look at the correlation. What more do you need to know? Now, the fact that baby boomers and older Gen Xers did very well out of that in perceived terms of owning properties at the right time, holding property, perceived prices of property, which is what most boomers, feel wealthy from. And they've got back end into assured pension schemes and having, monstrous increases. You can see there just from 2000 to 2020, the price discovery, so-called, of stock markets that gave them a real strong kick out when it came to pension payouts, right? All of it has been driven predominantly off the back of a change to full fiat in 1971. Now, do they care, the boomers? Some probably do. Do they understand it? Some probably do. The majority won't. They just got lucky. Is that happening to your grandkids? There's a reason why the next generations are less wealthy than their grandparents, and that chart tells you all you need to know. So what do you do to counter that? Do you just sit back and hope that that system will persist? Well, the system will persist. But is it fair that your kids and grandkids and great-grandkids are going to be more susceptible to food banks while you enjoyed your nice big house waiting for somebody to be able to afford to buy it? What's the point? There's a gap in the affordability process if your grandchildren can't afford to buy the property that you're looking to sell and downsize when you're 73. So what's the point? Says it all. Luckily, we're on the front foot to change it, not just for ourselves, but for everybody else who wants to listen. Right, politics, real quick. Indonesia, President's office considering adopting Bitcoin as a national reserve, just another big sign of what I'm talking about. A lot of this will be repetition in terms of what's going on macro. It's just interesting to separate it because this is actual government activities taking place, right? Actual government activity taking place. Trump signed an executive order, this is a big one, prohibiting and the denying of banking services to companies or people that they don't choose to like. Big issue. I think we're going to have a lot of problems with this in Europe over the coming couple of years. But thankfully, you're also going to find the Europeans having no choice but to shift in line with what's happening in the US. You're already seeing a lot of policy being copied, certainly in Britain, in the UK, by what's going on in the US. I don't think the Europeans are going to have any choice but to follow it as well. And this is one big one that they're going to need to look at because it's disgraceful what they're getting up to. Brazil to hold a strategic reserve hearing. So they're looking at it. This next, where are we at? Next week, is it? Yeah, next week. They'll be looking at a hearing to look at strategic Bitcoin reserve, just following again the wave of the US. The UK, late in the crypto wave, according to ex-Chancellor George Osborne, of all people. So he's slamming the UK. I think he's now working for a crypto company, if I'm not mistaken. He says, if crypto is happening, then we want to see it happen here. Yeah? That was a message a decade ago, but we've allowed ourselves to be left behind. Okay, well, you weren't too vocal about it, George Osborne. The last time I heard, when you were Chancellor of the Exchequer, you were keeping your arms close to your chest as usual. But either way, he's now coming out as a voice. You've also got the same thing going on with Rees Mogg, who's a plum in your mouth ultra conservative in the UK. He's now got his own YouTube channel. He's gone a bit more following the media wave, as you've got with Farage, and he's very vocal, mainly because his father actually wrote The Sovereign Individual, by the way. So he's known about this all his life, to be fair to him, but he's now slowly connecting the dots. But if you listen to his latest YouTube outputs, same with Osborne, same with all these people, Farage as well, they don't understand what we understand. but they realize it's an opportunity to make a big difference. Whether that's for ignorance or complicity, we'll find out, right? But again, if you want to moan about things, then go out there and put yourself in a position to make the change. Become an MP or keep your mouth shut, right? So, or create yourself an ecosystem like we've got at DBM. Become something of a voice that actually helps create the change rather than moaning about it, right? So to be fair, if you're George Osborne's and your Farages and your Rees Smoggs and your Trumps and all the rest of them, at least they're trying to do something, right? If you are really that bothered, go and do something for yourself as well, right? Go and set up a YouTube channel or something. Get something happening. Make the change. The best thing about that in the digital space is that you're working in tokenomics then. So you're actually part of the demand cycle, which starts with realization education, right? You don't just sit back selfishly accumulating Bitcoin and hoping it'll affect you. You get out there and help other people because that has the direct effect of helping you. And it's more fun, to be honest. It's more fun. White House is preparing to crack down on banks accused of debanking, which is why you brought that executive order through. Dubai, again, moving on quickly. Okay, we've spent many weeks in Dubai over the last few years for this reason, because we spotted what was going on. We understood that's where a lot of these innovative companies are. We made a lot of connections, a lot of friends, a lot of network out there, and we understand exactly what's going on. Dubai officially approves Bitcoin and crypto options. Bang, right? So again, I said this many times before, the geopolitical shift towards that part of the world when it comes to monetary policy is just irresistible. So whatever's happening in China, whatever's in the US, whatever's in Europe, they're not daft down there in that part of the world. Obviously, they've been used and abused for many years. From the oil point of view, most of that wealth sits on the New York Stock Exchange. But slowly but surely, they're figuring out that they can build their own stuff, and Dubai represents that, right? Dubai was nothing 50 years ago. A hut and a couple of hotels. Now look at it, right? So they're figuring it out very quickly, and hats off to them. China to allow its first crypto stablecoin, great. And then rumors around the place last week that they're looking to ban Bitcoin again. Right? That just shows, because they've got a top-down diktat, right? They don't go through these slow processes that is ultra slow in Europe, is speeding up in America massively, but in China it's super fast. They don't need to go pandering to any local jurisdiction or individual about changing this, that, and the other. They just do it, right? That's why they keep banning and non-banning crypto so much, because they've got people at the top who just don't know what they're doing at this level, right? So the whole idea is to be observant of that and just watch the swings. It's okay. I don't know. I just can't see them banning Bitcoin for long if they have done. But the fact they're bringing in their own stablecoins show that they know that there's much more efficiency on crypto rails and blockchain rails than you're going to get anywhere else. Hence, all these countries are doing it. The Fed published a report. We spoke about that. Again, there was quite a detailed DBM podcast last week on the revaluation of the gold reserves. And I've already mentioned the 401ks. Make sure you jump into Cleona's workshop to get the update on that. Again, a reminder, if all that feels like a lot of hose pipe, I don't blame you. Get yourself into the steps and just absorb the rhythm every single week. Put yourself into a process, a weekly process, at least a weekly process. We always talk about Friday through Friday. And aim to own more Bitcoin next month than you own this month. Just keep building it out like that. And soon you'll find yourself with de-risk cash, proper decisions, not going all in, not flying things into things because some marketers have said it's great or somebody said. You be your own boss. Work through the process, and that's why we brought through the Wealth series, because we've learned such a lot over this past decade. We can now put it into these very specific steps, which are akin to a business plan. Hopefully you found that useful. See you on the next call.